Top of the morning, Dan and Amy. First there was Brexit, then there was Trump, now there's Reddit. And the Reddit renegades who stuck it up the backside of some of the richest hedge fund managers in the world. And that precipitated, of course, a reaction from said hedge fund managers who want to stay some of the richest people in the world.
Yeah, don't take my money.
They interceded to shut down trading of GameStop yesterday, and Robinhood acquiesced. David Portnoy, Barstool Sports, who's also a day trader of sorts, he was on with Tucker Carlson yesterday, and he reacted thusly to stopping the vote counting in the middle of the election, so to speak.
When I saw what Robinhood was doing, ironically, Robinhood take from the rich and give to the poor, even though they do the exact opposite, I was stunned. I think it's criminal. I think there has to be an investigation. I think people have to go to jail. Whether that actually happens, I don't know. But I've never been more convinced about market manipulation and the people, the hedge funds, controlling the game than today. I mean, just to wake up and say, hey, you can't trade these stocks anymore. You can only sell them. We're going to intentionally crash the market in these stocks. And everyone who has it, tough. You're going to lose a ton of money, but we're going to save the rich people and the hedge funds. Shocking. Like in 20 years of me doing Barstool, I'm not exaggerating. It's the most shocked I've been, and maybe I shouldn't be. But, when you have AOC and Donald Trump Jr. both on the same side of an issue, something's dramatically wrong. Apparently it's real for them. And I love the lectures. You hear it from the hedge funds and the suits, as I call them, but they'll say they're protecting you and we're protecting you versus yourself, and people don't understand the risk and margin. And then you look at them, it's like, buddy, look in the mirror. You're doing the same thing. The hedge funds are betting against companies. We're betting on them with money and margin. We're doing the same thing. The only difference is we're winning and you're getting your teeth kicked in, and you just said, time out. We're changing the rules. And it's bananas.
And what David Portnoy described is exactly the statement that Vlad Tenev, the CEO of Robinhood, made on CNBC, which, as Chris Arnott told us yesterday, CNBC is Wall Street's Reddit. So Tenev went to safe haven, CNBC, and the insufferable Andrew Ross Sorkin to spin his propaganda.
We understand our customers are upset. We're doing what we can to re-enable buying in these names, and we stand with our customers. We stand for the everyday investor, and we do believe that you should be able to buy and sell the stocks that you want to, subject to all requirements. And that's what that's what we're working day in and day out to make possible.
What requirements would be my follow-up question?
Well,
when I heard that interview,
subject to what requirements as they change midstream. Here are the rules. We don't like the outcome. We change the rules. They call that being subject to the requirements. That's not exactly the common understanding of fair play. For more on this, we're pleased to be joined by somebody who knows more about this than we do, which is always helpful. That's what we try to do on this show.
And he knows how to make a good burger.
And he does that, too. He is a Renaissance man. He is CNBC contributor Jim Iuorio. Jim, thanks for joining us. Appreciate it.
Thanks for having me.
So, all Robinhood is trying to do is protect the little guy, Jim.
Sure, of course they are. That's so sweet of them, too. And I heard that on many different media outlets last night about how there needs to be something done to protect the little guy. This is an odd time to protect the little guy when he was actually winning. Yes, I do think that that this was going to end badly if it was left to its own devices, which it should be left to its own devices. But that's the way people in their 20s and 30s understand about what risk is. Nobody was understanding what risk is. To put a fine point on something real quick, when they said that we're not accepting any buy orders, just sell orders. Now, people who aren't traders and aren't in the market think about, well, then people who have it are the only ones who sell it. No, even someone like me who the last thing in the world I wanted to do was participate in any of this, the moment I read not accepting buy orders, only accepting sell orders, that guys like me flip it up to think, okay, let's sell it ahead of everybody else because it's perfectly legal to do that. If the only orders that come in are sell orders, then we know which direction it can only go.
Right.
So to me, again, if you went a month ago and tried to sell this story to Hollywood, that an app that was literally called Robinhood and they were going to, these ragtag band of rebels were going to meet in the forest of Reddit and organize an uprising against the establishment, I don't even think they'd believe it. This is a fabulously captivating story for everybody who's listening to it. I got calls from people all day yesterday just because people love this story.
Well, Robinhood's already facing 2 class action lawsuits, and they said today they're going to have offer limited trading. But this market manipulation, don't you think it's criminal?
Oh, of course. Well, I think it looks criminal. I don't want to. I think that if I was law enforcement and if they need any help to go through this, I'd gladly, because I think it should be gone over with a fine-tooth comb to see if there was any bad actors and nefarious actions that went into stopping this yesterday. Because from the outside, it looks awful. The little guy's winning, and all of a sudden, to protect the little guy, we're going to just destroy him for his own good, and at the same time give hedge funds, an opportunity to perhaps reset. I'm not saying that's what happened. I'm saying if I was in law enforcement, I'd sure get to the bottom of it quickly, and I would, advocate sending people to jail if that was nefarious.
Well, so there's rumors that abound, as I'm sure you're well aware of, that include those hedge funds, particularly those that bailed out, so Griffin and Cohen, that bailed out Melvin Capital, maybe reloaded their shorts before they told Robinhood to stop trading.
If that happened, wow. I'm not saying that it did happen, but I think
me neither. I'm just
I think me neither. Everyone listening,
but that's an example of something that would be criminal.
That's an example of something that would be so. In my opinion, they should be sharing a cell with Bernie Madoff if something like that happened. And again, I'm not saying it did. It's amazing. It's just people think that white collar crime is somehow different than holding someone up at gunpoint. And to me, if something like that happened for anybody, I think that it should be treated harshly.
So how much money did hedge funds lose? I mean, I heard anywhere from $5 billion to $70.87 billion.
I heard $15 billion, and I think that people are just throwing things out there, spitballing. I think we can agree that it's a significant amount of money. And remember, these hedge fund guys, too, it's definitely about the money, but it's also just the gall of the merry men defeating them at their own game. I imagine just sparks something nasty competitive in them as well. And I don't even think, like, when they're pulling the levers back there, I don't even think they sometimes think of what's right and what's wrong. But again, speculation.
Well, so here's the thing, so the arguments being made by those who were flacks for Wall Street, including Robinhood, flacks for the big hedge fund managers, Robinhood, who my understanding is Citadel is their biggest revenue source. They're 606, as Zero Hedge reported. Citadel, Virtu, G1X, Wolverine, countless hedge funds which are tightly interwoven into the fabric of the market. So what people I don't think appreciated until this all broke apart is that Robinhood's customer isn't the little guy investor. That's actually their product. They sell the data to the big hedge funds. They sell the data of their individual investors to the hedge funds.
I think that's important that people understand that, and I think all I can do is underscore the point you just made. The little guy is not Robinhood is that's just a ruse. Obviously, they have to make money somewhere. If they're not charging you, they have a customer somewhere else, and someone is paying for the order flow. So it's unbelievable, and I hope that all I want going forward is for every new generation to have a healthy amount of mistrust, and things like this have to happen. You can't really trust these sort of things, and you have to understand that sometimes the system is rigged against you, and you have to figure out how to circumvent that.
Sometimes.
And I think that's not a bad thing.
Yeah.
I mean, sometimes you got to blow up an account to understand that people aren't on your side.
Right. I mean, it's sort of like, if you're not at the table, you're on the menu. If you're not rigging the system, then you're the one getting rigged. I mean, that's sort of the handle.
It was the movie Rounders about the line about if you're sitting at the poker table and in a half hour you haven't identified the sucker, then you are the sucker.
Correct.
I thought that was very funny.
Well, so I also want to get your handle on how bad this could have been had there not been this extraordinary intercession. Again, going back to Zero Hedge, according to financial data analytics firm Ortex, short sellers, mostly hedge funds, sitting on an estimated losses of $70.87 billion from their short positions in U.S. companies just in calendar year 2021 alone. And so had not Robinhood did what it did, what could have occurred yesterday?
Well, of course, anytime you start to see disruption, particularly in hedge funds that have a lot of positions in other markets, when they have to start liquidating those positions to cover margins and others, it has a definitely communicable effect through other markets. And it's bad. And it could be something that drags us into a bit of a market malaise if it's let to go to what I consider a natural end. And that's fine. Markets tend to get people don't assess risk properly over time periods, and then all of a sudden everyone needs to be slapped in the face and reminded that risk exists. It's not a bad thing long term. I'll make the argument that it's a good thing long term. But yeah, it could be nasty. I think a lot of the weakness we're seeing in equities in the broader market over the last couple of days is just the market doesn't like dislocation. There's something else I'd like to add to this too. The government sits back weeping and whimpering and clutching their pearls, but the reality of it is this, is that the government themselves has injected $4 trillion into the system over the last year, put a whole class of intelligent college graduates out of work, and then they're surprised when the money starts to show up in weird, wild ways. You can't predict where it's going to pop up, and this is just absolutely a symptom of bad policy.
Yeah, and are the markets going to be crazy today, and are they already with the
It looks
early
crazy
trading?
today. Yeah, S&Ps are opening up. The futures are opening up right now, and they're down about 35 in the S&P. So nothing terrible, nothing that we haven't been in the last couple of days. But I actually think that if we see a little bit more weakness, remember, selling begets selling sometimes. I think people will start to puke out a little bit.
I wanted to get your reaction to something that White House Press Secretary Jen Psaki had to say yesterday about questions regarding Janet Yellen, now the Treasury Secretary, first female Treasury Secretary, in case you hadn't heard, that her $500,000 or so in speaking fees to big banks, including Citadel, and big hedge funds, including Citadel. What that really meant does it mean she needs to recuse herself from any oversight or commentary about what has transpired between Robinhood and Reddit and the big hedge funds? This is Psaki.
Yesterday, that the Treasury Secretary is monitoring the situation and she's kind of on top of it. There have been some kind of concerns about her previous engagements with Citadel and speaking fees that she has received from Citadel. Are there any plans to have her recuse herself from advising the president on GameStop and the whole Robinhood situation?
Well, just to be clear, what I said was that we have the Treasury Secretary is now confirmed. Obviously, we have a broad economic team. The SEC put out a statement yesterday that I referred to, but I don't think I have anything more for you on it other than to say, separate from the GameStop issue, the Secretary of Treasury is one of the world-renowned experts on markets, on the economy. It shouldn't be a surprise to anyone she was paid to give her perspective and advice before she came into office.
Jim, is that why Citadel and Goldman Sachs pay Janet Yellen like they used to pay Hillary Clinton, is for her advice?
You got to give me a second. Sure it is. Sure it is. Yeah, of course. There are these unbelievable market experts who've taken their market expertise into the public sector instead of staying out in the real world making money. It's absurd. And again, we mentioned the word mistrust a couple minutes ago. This kind of thing, I want it to be plastered over every newspaper. I want everyone to know this and get a healthy mistrust of the establishment. We just talked about who Robinhood's clients really were, Citadel, and the government. Oftentimes you can find, these relationships there as well. So you wonder who's protecting who. And at the end of the day, the answer for the little guy is sometimes nobody.
I wanted to get one other actor into this conversation in a little bit more pronounced fashion because everybody's, piling on the hedge fund billionaires because it's easy to do. But with government policy, Peter Earle, who's an economist over at the American Institute for Economic Research, writing that it's been governments levy destructive policies on their economies, wrecking hundreds of thousands of businesses, sending hundreds of millions worldwide into unemployment. Central bankers and state treasuries then pulled out all the stops to attempt to slow the onset of a huge artificial depression. And as the facts regarding the disease became clear, politicians were unwilling to change their direction. And so what do you have? You have investors searching for yield because you have the Fed holding interest rates at zero and they're moving into commodities, real estate, junk bonds, foreign currencies, stocks. And so the externalities that have been created by government policies, as you were sort of talking about with college kids with a little bit of cash on the sidelines, where's that money going to appear? It's in part government policy that is driving some of this speculative trading and perhaps injudicious risk taking.
I think that I'm not just saying that it's a couple college kids with a little bit of extra cash. I'm talking about them injecting massive amounts of money into the economy and keeping interest rates at zero basically across the yield curve. That creates absolute thirst and keeps people walking out the risk spectrum further and further. This is the bubble bust creation cycle that we've been in over the last 25 years by an overactive government and proactive Federal Reserve. It's outrageous, and it will continue to happen unless they understand that they're causing the problem. Spoiler alert, they're not going to understand that they're causing the problem because it's so much easier to blame somebody else. But yes, they're creating speculative bubbles. It shows up in weird places. I would not have predicted that it's going to show up in a brick and mortar. I don't even know what GameStop does. And by the way, I don't care what GameStop does because it's completely immaterial. But I have a feeling they're not Apple. So
no.
Yeah.
No, but and last comment too, a hedge fund. So again, it's easy, and both sides are doing it to vilify the hedge fund billionaires, and I don't like anybody rigging the system. So I don't like I hear the rules of the game. I don't like the outcome. We change the rules midstream so that I'm protected and my competitors or others are exposed. But there's nothing intrinsically wrong with a hedge fund. There's nothing intrinsically bad about hedge fund managers. It's a question of rules of the game, and are they transparent and fair?
Yeah, there's no doubt about that. I'm fine with the hedge fund model. The problem, there's a minor problem I have with it, is that these hedge fund guys, it's not their own money, and if they get rewarded handsomely if they take big risk, and that's fine. I don't mind big risk taking. If you take away the government's propping up of the markets, then you would see a lot more shakeouts and a lot more corrective phases that keep everybody honest. So the government comes in and puts in what we called the Bernanke put, and then we called the Yellen put. If the market if the speculative fever keeps getting worse and worse, then the corrections that we see that knock people out are way less often and way more fierce. That's not the way it's supposed to be. So I have no problem with risk taking. I have no problem with a hedge fund quant saying that it's a 3 standard deviation move for the market to get to where he has sold his calls and it's never going to happen. And then, guess what? In the financial industry, we always liken it to picking up nickels in front of a steamroller, where you're taking these small amounts and hoping something won't happen. And if it does, you're dead. But I don't mind that happening. I think it's beautiful theater, and it's a good thing for the market long term if it's allowed to happen.
Yeah. All right. Good comment. Jim Iuorio, CNBC contributor and owner of Brant's in Palatine. By the way,
we didn't plug Brant's near enough.
No,
you gave Dan a T-shirt, and I didn't get one.
No, he didn't give it to
me.
me.
You're gonna get one, Amy. You're gonna get a T-shirt. I didn't have any women's sizes.
I don't care. I'll wear men's.
Okay.
Don't gender bias.
I actually wear a women's small.
Oh, that's right. He likes the baby tee. I like the long sleeve black Brant's T-shirt.
I want to make sure I give credit where credit is due here. Is that T-shirt from you and my friend Dr. Phil, the dentist?
It's from Dr. Phil, the dentist.
Oh, okay. You take credit for Dr. Phil?
Yes, it's from him.
Jim, you Wall Street guys. I mean, you just can't trust anything you say. Jim Iuorio, thanks for joining us. Appreciate it.
And he joined us on our turnkey.pro answer line.
It's news, opinion, insight. This is Chicago's Morning Answer on AM 560. The Answer.
After 25 years of building websites for all kinds of companies in many different industries, AmericanEagle.com realized a well-designed website is also your best employee, bringing efficiency, revenue, production, showing up every day, giving above and beyond to increase your bottom line. That's what a website designed, developed, and hosted by AmericanEagle.com has brought to so many clients. An AmericanEagle.com website is a 24/7 branding exercise, building rapport and thus brand equity while you sleep. Companies like WeatherTech have relied on AmericanEagle.com's website design and development and hosting capabilities for years. When some of the world's top brands need a reliable company to prepare their sites for high-traffic events, who do they call? AmericanEagle.com. Their clients have come to rely on them for a full line of website services, from consulting and strategy to digital marketing, hosting, and maintenance. Give the team at AmericanEagle.com a call today. 1-877-WEB-NOW. The number 1 is the number. AmericanEagle.com is the website.